Hey guys, how is your Friday? Mine, pretty good. You want to know why? I told you last week. Check it out. One, cast less, not blue, this time of year especially. I'm back. All right, enough of that. Let's talk about this week's topic. It is tax time. Last week, if you watched it, I told you you want to pay more tax. You want to pay $3 million tax because it means you earn 6.8, not no tax because it means you earn $22,000. You want to pay more tax, but you want to utilize all the deductions and all the strategies that are available to you. So let's have a look at it as we near the end of the financial year. We've got a couple of weeks to go. Is there anything that we can do? What is it? All right. Let me go back there, the advice warning. I'm going to use a strategy in here. I don't want you to run off and do it without taking the appropriate advice from someone like me, okay? So that's important. Tax time. It's not just about putting in your income and claiming your deductions, okay? There's more to it. The deductions. Motor vehicle if you drive for work, your laundry if you've got a uniform, donations, accounting fees, your phone and internet, the proportion, I can't yet talk, that you use for business. Home office, COVID has caused most people to work from home for some portion of time. So that's all of a sudden become very popular. If you've got income protection insurance, if you do training, do courses in relation to your business, I said it last week, any expense incurred to generate an income is tax deductible, okay? That's just the deductions. But what about some tax reduction strategies? Accountants are more than just preparing individual tax returns based on, income and expenses. There's a lot more to it. And today I want to give you an example of a strategy. All right, here's James. He's 65 years old. He earns $140,000 a year. He has $244,000 in super. And this unused super contributions, what's that, you may ask, is $34,000. Let's have a look. Every year, we can claim up to $25,000 a year in what's called deductible or concessional super contributions. The amount that you contribute to super or that your employer puts in that you claim a tax deduction for. It's going to go to $27,500 from July 1. Currently $25,000. Now, forever and a day, that limit has been what you can put in each year. If you don't use it, you lose it. And then a great incentive from the government came out and said, if you don't have $500,000 or have less than $500,000 in super, you can carry forward for 5 years what you don't use. So if you put in 10,000 in the 2018-19 year, 19-20 year, and the current 2021 year, you've put in 30,000. You could have put in 75. You've got $45,000. So if you have a windfall gain or whatever it is, you can top up what you didn't do. Hope that makes sense. Let's have a look at the example from James. In the beginning, he had $244,000 in super and nothing in his bank account. What are we going to do? We're going to withdraw $34,000. Remember up here, he had $34,000 in unused cap. Now he's 65 years old. That's important. Because he's over 60, we can utilize a strategy called the transition to retirement strategy. Because he's over 65, there's no issue with how much we draw out. So we are going to pull out $34,000. Now he's got $34,000 less in super, $34,000 more in the bank. What we are then going to do, keep in mind, he pulled this money out tax-free. He's over 65. There's no tax to pay on that money. He pulled it straight out. We're going to contribute it back into super. So now he's got $238,900. Hang on a minute. 210 plus 34 isn't $238,900. We're claiming a tax deduction for the contribution. So it's less the tax. He's got no money in the bank. There's the tax, the 5-1. So that 5-1 is a difference between that and that and that. Okay? But when we go back and go, initially he had $140,000 taxable income, tax $39,000. We're now going to claim a $34,000 deduction to super, 140 minus the 34, which remember he pulled out of super tax-free and put it straight back into super the next day and claimed a tax deduction for it, is $106,000. Taxable income, $26,000. He's going to get a $13,230 tax refund when he does his tax. Or because he pulled money out of super and put money back in. Now, that is a great strategy, but like I said at the beginning, when I read out my little disclaimer, it's really only suitable for those who are over 60. So if you're over 60 and you're not doing that, you need to consider your options, and you've got 13 days to do it, or else you just fall into next year and get the benefit next year. If you know someone who's over 60, send them the video, share the love. See if they're eligible to do something like this. But like I said, accountants aren't just, hey, what's your income, what's your expenses? Let's utilize some strategies. Let's look forward into what you're about and see if there's anything like this that might be beneficial to you. All right, guys, that's it. My arm's back. I'm good to go. And I'll see you next Friday. Bye-bye.